Welcome to the Commodity Corner Plus podcast. It is December 5th, 2025.
Hey, everybody.
Week number 37. And our title today is, will the USDA December crop report be a market mover? Will it surprise? Let's get into it. Here's our weekly summary chart. And I highlighted soybeans because we did, unfortunately, fall off this week, down 32 cents. We may be breaking down. We'll get into that here in a second on a technical chart. Meal also broke lower. It looks like meal's rolling over after a rally, but I think that has a lot to do with the bean market as well. Canola obviously lower this week because of a Stats Canada final production report. We'll get into that. Livestock were the winners with a bottom in both live feeder and hogs. We'll get into that. Natural gas surged. We get this frigid weather that's causing some demand surges as well. Silver to new record highs. And of course, this one surprised me, the Canadian dollar, because of some better economic data, and we'll get into that as well. So let's start off with this December USDA crop report.
Yep. So next week we have the December USDA WASDA release, and it's not expected to be a major market mover and could be more of a non-event. And USDA is likely to reserve the changes that they intend to make for the final Jan report. Trade forecasts, as you guys can see, this is the U.S. crop. So corn expected to be almost unchanged in terms of ending stocks. Soybean slightly higher, wheat slightly lower. And if we move on and look at the global ending stocks figures, corn, again, almost unchanged versus the November estimates. Soybeans, again, slightly higher, and I'm assuming that's due to the bigger expected U.S. Ending stocks. Wheat at 272 versus last month at 271. On the South American side of things, not a lot of changes again. For corn, almost unchanged at 131.7 from Brazil. Soybeans from Brazil, 175.4 versus last month at 175. Argentina also hardly any changes more.
Yeah, so this for South America, it's early. We need to buy a little bit more time. There are some analysts that have lowered production, 1, 2, 3 million metric tons on the soybeans. You know, into that mid 170s. Remember, anything above 169, 170, depending on what you were listening to last year, it's still a record crop. So at this point, there's not a lot of concern. We'll get into that here at the end of our podcast. And again, as Abhinesh said, this report tends to be a non-mover. USDA tends to reserve any supply changes to the final January report. This is corn, and then this is soybeans. So you can see in the last 4 years, there's been no changes whatsoever. I'm hoping that because we didn't get the October crop report, that maybe the USDA decides, hey, we're trying to catch up. Maybe we'll provide the market with some more data, and maybe they do make some supply changes. The market expects yields to come down, maybe not by a mile, but they are, in general, the consensus is we could see lower. So could we see a U.S. corn yield down to 182, maybe a bean yield that's slightly lower? This past week, I went back and talked to some of the famous agronomists that you Americans know, like Fred Below, Ken Ferry, Dan Quinn from Purdue, and I asked them all this question. Based on the November crop report and the 184 yield on corn, the 53 on beans, you take the over or under? They all took the under. They say, Mo, based on our client base, based on all the people we've talked to, it's below last year. Ken Ferry said the 219 record crop for corn in Illinois is a 210. It's closer to a 210, not a 219. Dan Quinn was the most vocal out of the three. I asked him this one question, and I've been very concerned about this, and I'm not sure we're ever going to know. But because the government was shut down, we never got that October crop report. And that October crop report is very important because and many have not asked this question, but it's the USDA harvesting their plot data. weighing the corn, weighing the beans. Dan Quinn said, Mo, I know a lot of folks at the USDA, they did not get access to their computers nor their office. And he believes that the USDA has no clue that disease destroyed that corn crop in Iowa, maybe southern Illinois, Indiana, Iowa. And he doesn't think that the USDA knows that dry weather forecast had an impact on beans. Ken Ferry said, guys, we're harvesting beans at 8%. That's a loss of 3 to 4 bushels. So that's our concern. So if we get nothing on Tuesday, this market's going to struggle because it's looking for some more direction. Another reason to move up or down. And so, unfortunately, we're going to have to wait till January.
The China U.S. soybean purchase tracker is currently at 26.7, as you guys can see. So about 3.2 million metric tons of sales seem to have happened versus the pledge of 12 million metric tons. We had Besson come out this week and say that possibly that deadline for sales is not the end of the year, but rather end of Feb next year. Today, again, we had private sales of 462,000 metric tons of soybeans to China. And soy exports are trailing last year, obviously, by about 11 million metric tons more.
The market's getting tired of the rhetoric. As Abhinash said, Brooke Rollins said on November 1st it would take 2 to 3, 4 months. It's just like the signing of this trade deal. Where's that? I don't know. Honestly, I'm frustrated just like everybody else. Scott Bessent, the trade rep, was on CNBC, and he said now that it's end of February, end of the season. What season is he talking about? He's a soybean farmer from North Dakota. Does he understand his seasons? I'm sorry, but you know what? So you've got this, look at this chart here now. You're rolling over. You got a head and shoulders top formation. You broke today weekly below $11.11 and a half cent, $11.11 and a half cents per bushel. That's a key support level. Let's just call it $11. It does not look good. The market is getting tired because they want things to happen sooner. Now today, that daily sale was bigger than all of them to date. So I'm wondering whether the sales will pick up the numbers. Maybe we add a 0 to the front of some of these daily flash sales. So it's not the end of the world, but technically, because you don't have a South American weather scare, because the USDA is not being your friend with crop reports, because they're still trying to catch up on all that data, the funds probably were long a good 150, 160,000, and now they're starting to take some profits.
This week we also had Stats Canada come out with their final crop production numbers for the current crop. Big numbers: a new record wheat crop and a new record canola crop. Wheat crop almost 40 million metric tons, and the canola crop almost 22 million metric tons. The wheat crop is 11.2% higher year on year versus the canola crop, which is up by about 13.3%. And looking at the province, Ontario, we have the Ontario corn yield come in at 175.6 versus what they were reporting last time at 179.1, and the soybean yield at 45.7 versus what they were reporting at 50.8. And this compares to the Great Ontario Yield Tour, which came up with yield numbers for corn at 178.93 and for soybeans at 46.61. So now that almost all the harvest is complete, what do you think of those numbers, Mo?
Well, I just want to go back to the Stats Canada numbers on all wheat and canola. These are records. I'm not surprised. It was a cool summer for most of them. It wasn't perfect by any means, but they had that smoke. Farmers would talk to us about the smoke, the lack of heat. I think it was that lack of heat that really helped the crops. And I think a lot of guys got a lot of timely rains along the way. As for Ontario, we had a drought here. We knew this way ahead of the Stats Canada reports. Stats Canada tends to underestimate the yields, so the fact that we're close is surprising. But both for the final number and these numbers here for Ontario, the Stats Canada tends to underestimate. A year or two from now, you could see these crops grow. Now, we tend to compare ourselves in Ontario to Agricor, the government insurance agency. They insure about 82% of the acres. So they'll come out mid-January. We'll see what they have to say. But the East was worse than expected because of the drought. The West was better than expected. The garden spot was probably Chatham-Kent. I'm assuming the two offset each other. But this drought is creating some unbelievable prices. If you have a crop, you can sell almost $8 flat price corn. For this time of the year, I believe that's a record. I don't think we've ever seen it this high. The dairy guys, the feed trade is the farmer's best friend if you have corn. And so the guys that don't have storage are selling because of cash flow reasons, pay bills. But the farmers that have storage are going to store it. They know they have an advantage because they know the province is short corn.
Well, Mo, last week we spoke about that key catalyst that's been lifting all boats, including stocks and commodities and Bitcoin. So the U.S. Fed, the expectations for the U.S. Fed to cut rates during their FOMC next week is currently at 87.2%, and this compares to a couple of weeks ago when it was just 30%. We should revisit that more.
Yeah, so this morning we had some PCE data, inflation data in the U.S. It was in line with expectations, up 2.8%. So no further evidence that we need to, keep rates unchanged. So the market, this is from this is the CME Fed Watch tool. It's been at 87% for the last week versus last week down near that 30%. So I think this will help fund flow. This will help sentiment. It could also maybe help the ag commodity sentiment, but again, because of the delays in purchases from China on soybeans, the market is tending to roll over. So it would be nice if the USDA could provide a friendly response on Tuesday, but I'm not betting on it, guys. Sorry.
And also to spend some time on Bitcoin. Bitcoin has corrected by about 36% versus its record highs during the recent correction. But this is not something new, it seems. So during its cycles in 2021 and 2017, there were instances when Bitcoin corrected sharply. But in all those situations, following the correction, there have been sharp rallies that have followed.
Yeah, you can see some of the inflows here on a month-to-month basis. There's a lot more inflows than outflows, but when you get these outflows, you get those corrections. So I think we've just found a new trading range, a higher trading range. Your support comes in at 82,000. If you break that and confirm it, that's bearish, but you tend to become bullish again if you can break back above 96,000. They didn't quite do it this week, but maybe we found this new range as we get into 26. Don't forget to try our program. This past week, we were talking about whether the USDA corn export forecast is too low or the soybean export forecast is too high and what impact that would have on prices as we head into 2026.
Let's look at the cattle market, and that seems to be making a V-shaped recovery. And for our clients, we rung the bell for a bottom in the cattle market as of the 25th of October. And the fundamentals, Mo, have not changed as far as the cattle market is concerned. Those numbers, the production numbers, continue to be very tight. The key 5-year channel weekly support in 2026, Feb live cattle comes in at 203.25, while for 2026, Jan feeder cattle long-term support comes in at 292.57. And the V-shaped recovery suggests that the lows are in, and Mexico reported another case of New World new screwworm disease, basically meaning that the supply issues are not going away, and we need some spelling corrections as well more.
Yeah, unfortunately, we called it lice instead of live cattle. So I apologize for that. And then I have an error down here as well. So it's one of those afternoons. I think it's time to go home. But yeah, this was all emotion, guys. I don't know about you, but did you find any more supply of beef and live cattle, feeder cattle in the United States? I didn't. So as we've said before, sometimes the funds will overshoot the mark to the upside. I think we did in the feeder cattle. And I think they overshot the mark to the downside. And you get this volatility. These V-shapes are famous. I would not be surprised, based on history, that after 3 to 4 months, this thing recovers. It's actually recovering quicker than I thought. But you need lower weights, better value, beef values like better demand. And you need that border to Mexico to remain closed, or just some more certainty. As long as the market knows what's going on, I think we can move on with the fundamentals, the bullish fundamentals. So I know Trump wants to try to lower that beef price. I know he's trying to win your vote, but unfortunately, I don't think that long term it's going to matter much. So I think 262 new highs, probably sometime in early 2026 in live cattle, and back to about 364 in the feeders in that sort of same period of time.
The wheat market is just unable to catch a break. Those steep global supplies continue to be very steep. Australia raised its forecast for their wheat production by around 1.8 million metric tons to 35.6 million metric tons. This is the third largest in terms of their production numbers, and that just continues to weigh on wheat prices.
Excuse me. Yeah, this is just adding to the global glut of wheat supplies. You had Stats Canada report another record for Western Canada, or Canada in general. And so you can see Russia, Australia, Canada. This number's actually, we should have changed that, but yeah, it's closer. It's much higher than that, closer to 29. So anyways, it's going to weigh on wheat, unfortunately. Wheat's trying to find a bottom, trying to recover, but it's tough because at every corner we're just announcing more supplies.
ASF continues to create issues in terms of global pork and hog supply. The latest is an outbreak in Spain. So Spain is currently the biggest pork exporter from the EU. The ASF outbreak continues to fuel that recovery in lean hog futures. This latest outbreak was detected last week in 2 wild boars near Barcelona, and 7 more were detected. The global tightness, or at least perceived tightness, seems to be supporting futures more.
Yeah, Germany used to be the largest in the light green, but Spain in the blue is now the largest, and the big winner could be U.S. pork again when it comes to exports long term.
Let's look at South American weather, which is important during this time of year. The European weather model is forecasting 3 to 5 inches of rain into some of those dry areas next week. If the rain verifies, that's great news. Those regions have been hit by dryness over the last 2 months. But the European model has been wrong for the last 2 months as well.
So see this map here, see this white area? That's your dry area, okay? And this is moisture from the last month. This chart's showing you how dry it's been. So this reddish area, this is the area that's a big concern. And this is the European model forecasting rain right into about Tuesday, Wednesday of next week. If this, and again, they've been wrong for the last 2 months, the models, both the American model, the European model have been playing some old tricks. They keep disagreeing. The American model's actually been more accurate, but this is 3 to 5 inches. This will put a big Band-Aid on that dry region. And if it doesn't verify, then we start to get that South American weather scare. So this could help soybean futures recover next week if the rains do not fall. I'm betting that they're not going to fall because the model has been wrong. So we'll have to wait and see. You're going to have to check it back in next week. And then, of course, this is the purple here is where you're going to get the 3 to 5 inches. But it's a lot of rain for a lot of Brazil. So this would be, would suggest a record crop still going into the end of December.
Natural gas prices hit an 8-month high, which is a 70% surge since mid-October. Exports of LNG were 40% higher year on year to 10.7 million metric tons as EU accelerates Russian gas phase out into 2027. EIA data signals a strong winter demand, and demand surge is what lifted this boat. A frigid December should have natural gas demand spike. Futures are now on a recovery path and putting together a rally mode.
So this chart's not up to date, but I just drew a line there that we're up to this 549 today. There's your third price count at 547. You can see the high from last year at 575. So a lot of this is priced in. You do not play this market this time of the year because you're reacting to it instead of trying to forecast where it was going to go. We were bullish back in August or September. That's when you go along this market. If you're looking to hedge natural gas for drying purposes or trying to lock in some long-term prices. But if you did not do that, you've missed this market entirely. In fact, this market at some point, you can see if we're trading up here, you can see how much higher it is than the 200-day moving average, which is our mean or average. And you guys know what to do. It's not a buy. What is it? It's a sell. And now this is not a recommendation to go sell natural gas futures on Monday, but just know that this thing's becoming very overvalued short term. And this happens every single year. I swear you could go along this market every year and go short the market at certain points, and consistently you can make money. So this has more to do with fear over a rise in demand and that sort of thing. So it is cold, and it's probably colder than normal for this time of the year. It's a little early, but it is what it is. So
the Canadian economic numbers received a boost. The Canadian economy gained about 54,000 job positions in November, and this was higher than what the trade was estimating. They were estimating a loss of 2,500 job positions. The unemployment rate fell to 6.5% from 6.9% instead of rising to 7%, which was what was expected. And due to all of that, you have the Canadian dollar, which rose past 72 cents U.S. for the first time since late September after the surprise labor market numbers. And while the U.S. Fed is expected more next week to cut rates, the Bank of Canada is expected to keep them unchanged.
this one's a big surprise. I did not see this coming, particularly not so much the employment numbers. They move around a lot, but we've gained about 180,000 jobs in the last 3 months. A lot of the latest jobs for the past month have been part-time workers, so I'd like to see more full-time workers. But third quarter GDP at plus 2.6%, who would have thought that? I mean, that is a very resilient Canadian economy. I don't know, the consumers are telling me the opposite. So you can see here that maybe this is the weekly chart of the Canadian dollar. We may be breaking above this trend, this downtrend. The daily chart looks even stronger. And who knows, we could retest maybe 74, 75 cents if this is a breakout. The only thing that could probably cap the Canadian dollar, which would be negative basis long term, so the local trade's going to like it because they're struggling with the lack of supplies in the province of Ontario. But it's a higher U.S. dollar. But the U.S. dollar sort of peaked around that 100, 101, and it's been slowly, gradually moving lower again. So that's not going to help the Canadian dollar. So this is a surprise. So just manage your risk. If you're, if you got good basis locally, maybe you need to manage some of that risk in the event that the Canadian dollar does head a little bit higher.
We continue to get those backdated CFTC updates. The latest one today is as of the 28th of October. And as you guys can see there on the screen, more buying into corn, soybeans, the soy complex, except for soy oil, into wheat as well, and cotton. On the livestock side, though, we saw more selling, including cattle and hogs, which is not surprising.
Yeah, so in real time, I'm going to guess the funds, this is at the end of October. We're into December already. So I'm assuming with corn, they would have covered a lot of that short position. I don't know if they would have went even. We'll have to wait and see. The funds can go long 250 plus thousand contracts of beans. I'm not sure they went that long, but maybe into that 150, 160. Because of the recent sell-off, I'm going to guess they probably took some of that off the table as well. For the most part, they're still short wheat and canola. We talked about that earlier. And livestock, that one's tough because I don't know if the funds removed all of the length and then added back some length recently because of that V-shaped bottom. But I'm assuming one of these weeks you're going to see a big drop there. So, but in real time, I think they're back to buying. I think the lows are in both in cattle and hogs. And I think seasonally demand should, Christmas demand should help that complex.
And they flipped back to net long in crude oil there as well.
Correct. Yep. So that's it, folks. Thanks for joining. Appreciate it. Don't forget to subscribe to the channel. We'll see you next week. Take care. Have a great weekend.
Bye, guys.